guys, Brian Stevens here at the National Real Estate Post. I want to let you know that Carl White and The Marketing Animals have the Loan Officer Freedom Podcast. Loan Officer Freedom, the ability to do things, podcast, and it's free every day. These guys do a really great job. You should check it out. All you have to do is to see the Loan Officer Freedom Podcast is click this banner right over there. Okay, so kind of a hard show today, but let's go through this because I think it's really important. The Mortgage Bankers Association Purchase Application Payment Index, or the PAPI as it's called, has increased by a whopping 32% thus far this year, including that payments have risen much faster than their personal income. Now, I know what you're saying right now. What in the heck is the PAPI? And this is why you watch our show every day. Now, the PAPI, or the Purchase Application Payment Index, measures how new mortgage payments consisting of principal and interest vary across time relative to what your income is. The higher the index value indicates that the mortgage payment to income ratio, or the PIR, is higher than it was a month ago, where the index is lower. So it really accounts kind of for inflation, which is a really interesting point by today's standards when you think about this. Because here's a question for loan officers. Do you realize that you could have written a loan a couple of years ago where you took into consideration the ability to repay with a rate like a 2.5%, and that number has shifted to a point where possibly that loan no longer has safe harbor, as you no longer have a reasonable ability to repay? What a novel idea, and it really displays the world we're living in right now. Now, here's the problem, and one that is all too familiar to lenders and people who look at this stuff all the time, like me. Here's the question. Is my mortgage company being honest with me in terms of the rate that they're quoting me? Hey, Brian, you're 50 basis points over raw pricing. It's a good loan for you to have right now, and this is how I base my rates. But how do I know as a loan officer that this is actually taking place? It's really easier said than done, isn't it? I mean, I can go to Optimal Blue and I could try to figure out like where rates are at, but in markets like this, well, I don't know, let's just say it's kind of turned me into a skeptic. Now, from an article from Mike Frattoni, and this is a great article in Housing Wire right now, the primary mortgage market is intensely competitive. As I highlighted in a column earlier this year, lenders are essentially price takers in this market. If they raise their offered rates much above market, they're going to lose the business. If they lower them much below the market rate, they won't be able to cover the costs in the long run. And when you hear something like this, it might make you want to take your skates and put them back up in the attic, but I say no. Here's the thing as a loan officer that you have to consider about this market. One, our market as we stand here today is transitory, meaning where we're at today is not going to be where we're at tomorrow. Kind of a frightening idea, and eternal hope all in the same breath. It will change, it will get worse, and it will get better. Yet, however, the option of being a loan officer right now and trying to sell loans to people is really kind of crazy, because the option to buying a house right now has become nothing less than frightening, and it's getting more monkeypox crazy on a daily basis. Now, you might ask what I'm talking about. So, from an article over here, April data illustrates the perfect storm of supply and demand dynamics behind the continuing rent surge. From a low number of available rentals to higher for sale housing costs has forced would-be buyers into renting for a long-term plan as a solution. And this is according to the chief economist from Realtor.com, and his name is Daniel Hale. He goes on to say that renters are being left with few options to meet higher rents, and in some cases even offer above asking, whether they can afford it or not. Avail's new survey shows that rents are not only maxing out renters' housing budgets, but are the biggest strain on the overall finances, even as inflation drives up expenses across the board. So what does this all mean? In layman's vernacular, like something that you can understand. Well, try this one on for size. 66.1 housing expense. That, my friends, is what renters are paying right now across the board, and that is 100% unsustainable, and that's period. Keep in mind, those who rent are generally of the lower socioeconomic rungs on the scales, which means they earn less money, so that hard 66% is, well, I mean, here's what it is. How in the hell am I going to put gas in my car and food on my table type of thing with the rent that I have to pay right now? So now as a loan officer right now, this would be a great time if you're making a good living to bend over and kiss your own butt, because you don't have to deal with this stuff on a regular basis. But this is what's happening to people around the country right now. And the survey goes on to say that 57.3% of income is going towards groceries for renters. And yes, I've done the math on this one. That puts us well above 100% of what we're bringing in. It's very unsustainable. Now, here's the issue. The United States median rental price hit a new high of $1,827 in April, while the annual growth rate of plus 16.7% moderated slightly from the number that we had in March, and that pace was 70%. Still, rents continue to rise at a double-digit annual pace, reaching 21% higher than in April of 2020, right after the whole COVID onset thing hit. Meaning, you might not like the idea of owning a home right now at these prices and these rates, but what you need to understand and what you need to tell your pipeline as a realtor or lender right now is that the alternative to owning a house right now is going to put you in harm's way sooner than later. It is time to freeze your housing expense, and the only way to do that, my friends, even at these high rates and these high prices, is to own a house. I hope that helped.